Welcome to Second Take, the show that focuses on the issues behind the news. The world's biggest mining company, BHP Billiton, is pulling in its investment horns as the light for additional investment turns amber. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Now, the resources business is cyclical. Do you think we're going for a downturn now that BHP's announced that they are decreasing investment?
You know, we've had this fantastic super cycle that's been stronger for longer, and I think people have forgotten that there is a cyclical nature to the business. There were even prognostications by the big five mining companies that they were going to spend $200 billion in the next 5 years on growth. And every time you spoke to a chief executive from BHP Billiton or from Rio Tinto, from Anglo American or from Vale or Xstrata, they were always talking about big numbers, that they were going to develop organic growth by creating their own projects rather than acquiring from other people. Well, that's suddenly come to an abrupt halt. I think particularly the Australians woke up this week with quite a shock, because, you know, they were expecting BHP Billiton, which gets a lot of money out of iron ore, from continuing with a big expansion program. And of course, the CEO of BHP Billiton, Marius Kloppers, he was in the US for the Merrill Lynch Bank of America conference, and he immediately put on the amber light and indicated that, you know, the program is not going to go ahead as planned. The next morning at lunchtime, the chairman of BHP Billiton was even more strident. And when a journalist said to him, "Are you going ahead with your 80 billion rand growth program to 2015? There was a one-word answer: no. And so they haven't indicated to what extent they will go ahead with that 80 billion, to what extent they will curb it, but they certainly are very selective at the moment, and iron ore is getting the thumbs down. Copper continues to get the thumbs up. So there are going to be different analyses and also different countries. I think the BHP Billiton chairperson, Jack Nasser, he lashed the Australian government in this speech, and he complained about lack of productivity and work stoppages and government interference and no concentration on you know, wealth creation, only emphasis on wealth distribution through tax. And so the message you were getting was that they're going to be very selective about countries, and, you know, they could move to another country. But before I move off, I must give you one quote from Jack Nasser, which indicates the uncertainty in the world, and it's sudden, you know. And I think the Greeks have brought it on with this election, which now has changed the whole debt repayment paradigm, and investors seem very, very shaky, as it was, you know, in the 2008 meltdown. They're all running for cash. You see, why these big companies like BHP Billiton are now saying, no, we're not going to use our cash for growth, is because their shareholders are banging on the door and saying, look, you know, give us the cash, give us the dividend, you know, rather. Give that cash to us. Don't waste it out there because your market is falling. There's no longer this growth. But this comment from Jack Nasser at this lunch in Sydney, which I think he gave to the Australian Institute of Company Directors, he says, well, he said, look, rather than the world settling down, he was foreseeing that it's facing increasing uncertainty. But this is the way he put it: it's going to feel as if the ground is shifting under our feet. So there is a degree of concern that is reaching a fever pitch, you know, about the state of the world. And hopefully we're not entering another economic meltdown, as we saw. And, you know, deep down, I would love to see the super cycle re-emerge, and that this is just a temporary blip. But China is definitely slowing. Eurozone problems, you know, UK technically in a recession. Not such good latest figures coming out of US.
Now, you've mentioned that iron ore has been giving a thumbs down while copper has given a thumbs up. What's the story there?
Well, it seems as though the steel business has this element of peaking in 2025. That's what they're looking at. That you know, the forecast on the steel crude growth is still intact. But what they're saying is that there will be less demand on a yearly basis moving towards 2025. It's quite difficult to understand how these things work. But they also talk about in 2025, suddenly China, which is this big buyer, getting more access to scrap metal. And you know, we know in the developed world, scrap is the big producer of steel. You know, not all the iron ore is used in that way. Often, if you go into the United States, you'll find that they're using scrap. They're using electric arc furnaces. So he's indicating that from 2025, there's going to be greater availability of scrap. You can imagine that that's true because, you know, China has been developing quite strongly now. There will be that element of recycling of steel, and then they can melt that down, and it competes against iron ore. So I think that's one of the reasons why iron ore is getting a bit of an amber light at the moment. Copper is different. There seems to be a different set of fundamentals that point to supply still having to chase demand, whereas iron ore will have met demand.
Now, what do you think the future for these commodities is post-2025?
You know, I think everybody's going to have a new look at it. When the world's biggest mining company puts on the brakes, you know, everybody in the passenger seat, you know, sort of gets pushed to the forward and they start looking at the data again. They may be talking their own book to some extent. Maybe they want to frighten off other people so that they don't go ahead with new production at the moment. You know, they are claiming that they're in a very good position because their costs are so low. I mean, they're low-cost producers. Even though their costs are rising, they're complaining about it, but they're low-cost producers. So they're warning other aspirant producers, you know, don't go into this without watching it very carefully. Make sure you've done your homework very well. Otherwise, you're just going to ruin the market for everybody. And I'm sure that is one of the intentions of the statement that came from the US and from Australia to put some fear into competitors, not to go put their foot on the accelerator. At the same time, we see a lot of people going into Africa now, and you know, they're finding iron ore there. They're finding very high quality iron ore. And there is probably place for everybody, I would imagine. But the big guys don't like too much competition. You know, they don't want too many dogs yapping at the heels. So perhaps they're also talking their own book.
Well, thank you very much for your insight, Martin.
It's a great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insight into what's happening in the mining world.